The broadcast is now starting. All attendees are in listen-only mode.
Try this. What time is it? 10 to 1, 5 to 1. All right, it's a good time to start. All right, good afternoon, everyone. It is September 26th, and it's about 5 minutes to 1. Again, every Thursday from between 1 and 2 in Chicago time, we'll set about an hour of our time to go over the CFRN trade setup in slow motion. This is an opportunity for you guys that are on the trial to get an absorb what's going on inside the training room. So what I do here this afternoon, you'll see it in fast forward in the training room in the morning. So the takeaway hopefully is you absorb what's going on. You see what the setup is. You absorb the trade setup. You hear some of the buzzwords. So when Michael is in the room in the morning between 8:30 and 10:30, you're able to absorb, like I said, what's going on. So at the end of the trial, if you decide, hey, I'm going to push the PayPal button and become a member, your eyes are wide open. You have some good expectations on what to expect, that kind of thing. So the game plan for this afternoon is A, go over the trade setup. And like I said, that'll be a great cheat sheet or syllabus for the new guys on the trial. B, we'll then go into a live setting and live market, and we'll look for the trade setups. Okay, and I'll point them out. And if we see a few, then what I'll do is I'll actually go inside the DOM. That's just get my highlighter out. Get inside this tower here, and I'll show you where to buy it and how to sell it, and then how to manage the trade along the way. Okay, and like I said, the idea is to try to do this in slow motion, so we'll see what's going on. Okay, this will give you the ability, especially if you're already a CFRN member, give you a chance to ask questions, because for you guys, I'm going to go over some of the common traps that kind of the people fall into. Remember, I'm in the room every single morning. I'm just in the background hanging out, letting Mike do his thing. From time to time, if something pops up, I'll answer some questions. So I do know the setup. Over the years, I've seen plenty of screenshots and done some one-on-one mentoring with guys to, like I said, go over the setup, try to improve their trading ability, identify, the pullbacks and the trend lines, and go over all that stuff. So I'm definitely aware of what's going on and how to do it. So that's the game plan this afternoon. So before I present, let me get rid of this. Switch guns. Before I present, I have to go over the disclaimer. And again, I do not like to just throw it up there, tell you to take a look at it, and then put it under the blanket. Been around too long, so almost 25 years. So the idea really is to take 5 or 10 minutes to go over what this means. All right. The disclaimer really is for the brand new guys. Okay, the guys who are just entering into our space. My experience with working with CFRN, most of the guys that knock on their door, they're already numb to this. Okay, they've been to this guru, that guru. They've learned this method and learned this trick and that, that setup. And along the way, they've been through the battle, lost money. They know the risk associated with it. They've been through the wars. So the guys that are brand new, basically what this says is that you can lose everything in your trading account and some if you're not using stop losses, if you don't have a trading plan. Do this. If you don't have a trading plan, you're not engaged in the marketplace, you're not in tune with what the news items are for the day, you're not looking over your trading account, if you're not doing those basic 5 things, this disclaimer will probably hit you right smack dab in the gut. All right, and like I said, I've seen it over the years. I've really seen the good, the bad, and the ugly when it comes to trading. So again, I don't like to take the disclaimer lightly. The goal of this webinar is the eyes wide open approach, and it starts here. So the guys that are brand new, welcome to the game, because this could be reality if you're not paying attention. All right, the brighter side of it. Okay. If you go down the CFRN path, you're going to have a trading plan, right? That's what we're going to go over. So you got to check that box. All right. Every trade has a stop loss attached to it. So we check that box off the list. We're going to be on a 4-tick range chart. So you really have to be engaged in what's going on in the marketplace, because you're going to be looking at the market under a microscope. And it's rules-based, right? We're going to go over 4 of them here. So well, that checks that box too. All right. And one of the rule sets set by CFRN is that they don't trade around news items, news reports. So you are going to be in tune with what's going on during the course of the day. In fact, if you have the DtPro platform, and that's the platform I'm featuring this afternoon, just go to research and ideas at the top and hit economic calendar. It's right there. So that checks that box. So the idea is, I'm warning about the risk associated with trading, right? And this big fat disclaimer that's right in front of you. But if you go down the CFRN path, you're gonna check a lot of those boxes off. So in other words, if you don't have the plan and the stop, and you're not engaged in the marketplace, as I said, this is gonna hit you right in the face. Okay, you're gonna cover all those bases with CFRN. Okay, you're gonna have some education there. Okay, now does that eliminate it completely? Absolutely not. Okay, again, you can be doing all the right things. Okay, and some goofy news item comes out, and you do place a stop loss like you're supposed to, and you're in front of the screens. If something does come out, there is a chance that your stop may not be elected. Okay, so that means you'll be still in the market. You'll still have risk in the marketplace, and you'll have to manage it. It's going to be a scary situation. I've seen it probably a handful of times, and it's centered around a crazy news item that no one expected, and you go into panic mode. So there is that risk. Okay, so we're not going to discount that. The good thing is that you will be in front of a dom, this tower here. Okay, and if something does happen, all you have to do is hit this exit at market and cancel button and get the heck out of Dodge. Okay, that gets you flat. It cancels any resting orders in that particular market. At least at that point, you can take a breath and go, what the heck just happened? Okay, so again, it's not the greatest way to start a webinar, but my goal this afternoon is to give everyone, especially the new guys, that eyes wide open approach, and it does start with the disclaimer and the risks that are associated with trading. We're dealing with a leveraged market here, okay, and that's why there's risk banked into it. Okay. Also, past performance is not necessarily indicative of future results. All right, it's something I have to talk about. I outlined it just for everyone. So just so you know, that's out there too. And the other thing is that the other thing you should consider is that the funds that you put in a trading account should be risk capital. It should be capital that you can afford to lose. Okay, nobody likes losing, but it should. It shouldn't change your lifestyle. If, like I said, the black swan event happens and you lose everything in your trading account, that shouldn't affect anything. No, you're not going to be happy, but the bottom line is, you're still going to be able to pay your bills and all that other stuff. Okay. All right. The next disclaimer is my relationship with CFRN. Okay. This is who I represent. Daniel's Trading. Okay, the platform, I support the platform. Okay, the platform is called DtPro. It's the same platform that Michael and Dwayne are featuring in the training room. Okay, if you decide, hey, I'm gonna take the trial, you have a chance to download the platform. It's absolutely free. The data is absolutely free with the demo. You'll get the download the indicators set. The good thing about that is, with a few left clicks, the indicators can be plotted right onto the platform. Now, not everyone is computer savvy, so they need some hand holding. So the great thing is, if you run into any problems, I support that also. I'm a phone call away. So it's not a do-it-yourself kind of relationship here. You can actually call me and talk to somebody. I'm the guy that'll pick up the phone. And if we have to, we can do a one-on-one go-to-webinar to get you up and running, get the platform booted up and running, and also the indicators together. Okay, so you're not wasting your time trying to get that situated during your trial. Okay, so it's a big benefit, especially if you're going to spend some money learning a new method, and it comes with a platform, and there's a lot of moving parts there. So it's nice that you can call somebody and talk to a live body, okay, that knows exactly what you're doing and how to do it. Okay. In the end, if you decide to go down the CFRN path, at some point you'll have to open up a live trading account. I handle that also too. I handle the execution, the brokerage, that type of service too. So again, it's the convenience is it's one phone call away. Okay. The biggest part of this is that BERT doesn't work for CFRN, and CFRN doesn't work at Daniel's Trading. There is a fine line in between us. Okay. They're a third-party advisory. Okay, so it's their indicators, it's their trading tools. They're the educator. Okay, so ultimately, if you decide to, go down that path, any money that exchanges hands is going to be between you and them, not through BERT and through a trading account. That's outside, just you and them. Anything on their website, okay, their videos, the Thursday night workshops, Logic 247, the concierge trade alerts, all that stuff that's related to CFRN. If you have any problems with that, you would reach out directly to them. Valerie's a good resource. She's on the team, and she'll reach out to you. She'll troubleshoot anything. She'll just help you along the way. Okay. All right. 1 second. My phone's buzzing here. Okay, I'm back. So that second disclaimer really just outlines our relationship. Okay, there's a line in between us. That's the bottom line. That's what has to be disclosed. A lot of times people get us confused. A lot of times people think I work for CFRN, and I don't. Okay, I just support what they do. And I know what they do, and I've been around from day one, so it's kind of cool. The short story is when it was just a radio program 8, 9, 10 years ago, Dwayne and I met somehow, and he said, "Hey, why don't you come on the radio program? We have guys that are, asking questions all the time, and it'd be nice to have a good resource in the background answering questions. We get to chat about the markets, talk opinions, and we can, guys can just really ask someone that's been around the block." So the relationship started that way. It was just a radio program, and then after a while, at least what I noticed is in the chat box, someone kept asking Dwayne, "Hey, show us how, show us how, show us how." And at some point he got together with Michael, and things started the education part of the program, and so now it's it's grown, and so my platform DtPro reads easy language. So Mike and Dwayne are trade station developers, and they were able to develop code the indicators inside the platform, so it was kind of perfect timing. So it just happened to work out that way, and like I said, I've been around trading, and so it was really maybe it was meant to be. I don't know. So that's the story. All right. So now that we've covered the disclaimer portion of it, let's minimize that. Let's get into the nuts and bolts of this thing, which is definitely for the new guys. Okay. So here we're gonna go over the trade setup. So the guys that are brand new, you can pay attention, take notes, or this is going to be recorded anyway. So you can always go back on the recordings at YouTube and find them. So, but anyways, the first order of business really is the time frame. You need to get you on a 4-tick range chart. So if you have DtPro up and running, the best way to do that, chances are you're on a time-based chart. You might be on an hourly. If you're on the Logic 247 program, you're on a 30-minute chart, right? Or you're staring at a 5-minute chart. Okay. The idea is to get in the 4-tick range chart, because that's the chart Michael is using in the morning. Okay. So the way to do that is, see this little drop-down box, left click on it, go down to custom and select a range bar. Make that one look like a 4, and then hit OK. So you're staring at the ES, the S&P E-mini, on a 4-tick range chart. Okay. And the big deal with the 4-tick range is that the height of each candle, no matter how big or small they look, they're all the same height. It's all 4 ticks. Okay. So why is that important to you? Is because when you hear Michael in the room, at some point you're going to hear him start calling out the highs and lows. And you're going to hear him start calling the highs and lows of the current candle. What he's doing is he's preparing himself, or he's preparing to place an order. He's going to be proactive in placing an order. Okay, so what he's going to end up doing is, if all the rules apply, okay, all the 4 rules that we're going to go over, okay, well, they're all in play here. What he'll end up doing is, you'll hear him start calling the highs and lows of the current candle, and what he's doing is he's actually buying it on a stop or selling it on a stop, depending on the setup. Okay, so if the current market price is here, okay, we'll end up buying it up here or selling it down below. So in the event that the market takes off, okay, he'll be going along for the ride, or in the event that the market breaks down, he'll get stopped into the entry price. Okay, so that's what he's doing. All right, so that's why I'm mentioning the 4-tick range chart is important, because that's the time frame you're going to be on. But it's for him. It's a way for him to be proactive and a little bit predictive. Okay. In the beginning, a lot of guys were like, "How did you catch that move? There's no way you could have gotten in there." So we had to, pull the car over a little bit and explain, well, this is what he's doing and this is how he's doing it. So that's why, I'm pointing that out. First order of business, however, is just get on the 4-tick range. It's day 1, and just focus on the time frame. So you're looking at the same chart that Michael is. Okay. Don't worry about all that extra stuff that I just gave you. Just get on the time frame. Okay. All right. Now back to the diagram here. All right. So we're going to work on the top portion of the chart here. Okay. So some buzzwords here. The blue and the red line here is referred to as the MA1. It's really, there's nothing fancy about it. It's just the MA1. And the green line is the BBC, and that is short for bullish and bearish cross. Okay, so together, that leads us into step number one, okay, which is this. When the MA1 crosses the BBC, okay, and the MA1 is red, okay, we got a red MA1 here crossing the green line. That's a bearish cross. If the MA1 is blue and crossing the BBC, well, that's a bullish cross. So the one that's highlighted here is a bearish cross. And the reason is MA1 is red. Okay, so now we're looking at opportunities to get short. Okay, and I know what I said we're looking for opportunities because what you didn't hear me say is get short, get long, get short. Okay, what step number one does is kind of light the match. Okay, that gets the ball rolling. Okay, once we get the cross, okay, whether it's a bullish or bearish cross, okay, now we're looking for step number two, which is this. After the cross, and we had a bearish cross here because the MA1 is red, the normal thing for the market to do is to gravitate toward the BBC, okay, that green line. We're looking for the normal, okay, we're looking for normal. Green line touches the BBC, but then you're looking for the down close or the correct close in the direction of the trend, okay? So we just identified a bearish cross with a red MA1, okay? In this example, we want to be looking for a red candle or a down close, okay? You're going to find out, and I'll go over this in a little bit, but everything is the same color. It stacks all the probabilities in our corner, okay? So we're looking for that ideal setup, okay? It doesn't present themselves all the time, but when it does, there's really no other filtering to do. It's just a reaction. It's a reaction to go inside that tower or dom and push a button, okay, and take action, okay? So the match has been lit. It's a bearish cross. The normal thing happened, which was the market pulled back to the BBC, and then we had the down close. That is what we're looking for, okay, the normal. Now what you're going to find out, I'm going to go over this too, sometimes the market has so much bullish or bearish momentum, it won't get to the green line, okay? This is an ideal setup, okay? But notice here, it never gets to the BBC, and it does go down, right? Does it again here, and then it heads down again, okay? What I'm going to teach you is, as soon as we get this cross, the next order of business is to activate a trend line. And what you're going to see Michael doing is drawing trend lines throughout, okay? This chart will be marked to put trend lines because we never know if it's going to do the normal thing and get back to the green line. We don't know if it'll get back here. If it doesn't and it falls apart, okay, we want to be in a position to take action, okay? So, again, we're looking for normal, and after the cross, we're looking for the market to pull back to the BBC, okay? In the process, we're drawing a trend line, okay? And we're doing that because we never know if it'll get back there, okay? So, step two is in play, okay? That's the pull back to the BBC with the close in the direction of the trend, okay? Now, after step two, then our eyes are going to gravitate toward the oscillator portion of the chart, which is referred to as a slingshot, okay? And the trade basically exists down here in the slingshot. It does. And I'm going to show you why. But before I do that, I want to go over the nuts and bolts of this thing, okay? So the red and blue line inside the slingshot is referred to as a cycle, okay? The green line, well, it's just the green line, nothing fancy about it. But what's important about step number 3 is the divergence that you'll hear Michael talk about, or the separation. And the separation is the separation between the green line and the cycle. Okay? As the green line is pulling away from the cycle, okay, it's like pulling back a slingshot. Okay? That is what you're looking for, the space. Because here's the scoop. What this indicator here is telling you is the momentum is bearish. Okay? It's red. It's got a great slope to it. The market should be heading down given what we're staring at here. Okay? What this green line is telling you, pulling away from the cycle, along with this price action here, it's saying, hey, this is just a pullback. Okay, this is just a pullback in this ongoing downtrend. Okay, and with this down close, okay, after it doing the normal thing, that is the step number 3 that we're looking for. Okay, that pull away. Say, hey, this is just a pullback in this ongoing downtrend, and this little price action up here combined with this air pocket, it's time to get short. That's what it says, get short. Okay, and what you expect to happen is the green line pulls away, and then ultimately the green line will work its way into the cycle and close the gap. And in doing so, price action follows along and makes a new pivot low. And when these two guys come together, this is where you close out the trade right here. Okay? Because in the end, the normal thing is this. The green line pulls away, closes a gap, pulls away, closes a gap, pulls away, closes a gap, until that cycle and the momentum turns a different color. Now the market's looking bullish. So then you're looking for the green line to get underneath the cycle. Okay, close the gap, pull away. Okay, so in the end, you're selling that rally, selling that top, and then when it changes to more of an upward bias, buying the dip, buying the dip. And along the way, you're going to put profit here, put profit here, put profit here. Okay, in a perfect world, that's what it's supposed to look like. Okay, we know that doesn't happen in trading, but that's the template right there. That's why the trade exists down in the slingshot. Okay, because this is just telling us, hey, here's the momentum of the market. Okay, and these little air pockets that are going on over here. All right, along with price action confirming that, is those are the decision-making processes that say, hey, you know what? Let's go. Let's take action. Okay? And as I said earlier, I hinted to it, when everything is the same color, red MA1, down close, red candle, a red cycle, even if you have a red MA1 here, this is blue, but when that's red, that puts all the probabilities in our corner. Okay? We like that stuff. Okay? When other things are happening down below, it starts watering down the probability. Okay, so that's a trade plan right there. That's it in a nutshell. Okay, and as I said earlier, every trade has an 8-tick stop attached to it, no matter what. Doesn't matter what market you're trading. So if you're brand new to the game, if you're trading gold in the crude, you're risking $80 a contract if you're dead wrong. If it's the S&P mini, it's $100. The euro, it's 40. The YM, that's $40. Okay. So again, that's what you're signing up for. Okay. So if this is day one, for some of you it is, you're not going to learn to pick the top and pick the bottom here and trade it from point A to point C. That's not what this is all about. CFRN is about taking a piece out of the middle. You're scalping, and you're going to trail the stop, trail the stop, trail the stop, and I'll go over the money management later until, okay, you get stopped out of the trade. Okay, so what you're signing up for in a nutshell is scalp the market, because you're on a 4-tick range chart. You're looking at the market under a microscope. And you're trying to take a piece out of the middle, and you're going to be aggressively using moving the stop down, aggressive risk management along the way. Okay, so this isn't a situation where you're going to set it and forget it. Okay, you're going to be in front of the screens, actively engage in what's going on in the market, and identifying basically. There's 3 here, but there's a 4th rule. And that 4th rule is that market, and this should be on the top of your page, it should be number 1. The market better be trending before you push any buttons. Okay? We better be making lower lows. Okay? We better be making higher highs. Okay? Before we take action. Okay? So there's basically 4 rules. Okay? That's it. What we're going to do is this, what we see here, when I just went over, we're going to go inside a live market and see if we can apply it. And we'll get inside the DOM, and I'm going to show you how to trade it. That's it. Bottom line. Let me open up the question box here so I don't forget any questions. Again, if you have questions, just pop them in the message box, okay? I got it open here, so now if anyone does, I'll be able to see it. Okay?
Okay, I see what you've done, but why is it going to be done?
Okay, here we go.
And so now what I'm going to
So let's do it. Let's get our hands dirty and see what we can do. So, when you're looking at a chart, first thing I want you to be looking for, this is the number 1 rule is the market needs to be trending. Okay, that's your number 1 rule. And that's one of the first traps that people fall into. They get caught in a sideways market and they don't even know it. And they're buying and selling and buying and selling and getting stopped out, and they get frustrated and they throw the new toy away and they go back to the guru they went to last year, and they even lose more money. The point is this, okay? Are we trending? Is the number 1 thing on your piece of paper. And what I want you to add to that is I want you to add this rule. I want you to get in the habit of hitting this zoom out button, okay, right here, this magnifying glass, okay. This will help you look what's going on over to your left, and whether or not we're trending or not, if we're making higher highs or lower lows, okay. This zoom out button might make the difference between you making or losing money. Tapping it 2 or 3 times. I'm not asking you to go to a 5-minute or a 10-minute or a 15-minute. Just hit the zoom out button. Okay. See a little bit more real estate. Okay. Now, the reason why I do that is a lot of times you get hypnotized by what the charts that Michael has in the training room. They're blowing up pretty good. So what might look like it's trending, if you do one of these, you might say, you know what? No, we're not. We're sideways. So we're staring at the ES, double top. Right now we got a little bit of a double bottom. For the moment, we're sideways. Okay, there's no action to be taken here. Okay, so we're not trending. Yes, we were trending here. Now we're not. Now we went into some consolidation mode for whatever reason. Okay, so we're not going to screw around with the S&P right now. Okay, let's go to crude oil. By the way, I'm on November crude, GCL X19. Notice the first thing I do is zoom out. Okay, again, the first thing that should hit you in the face is this: dynamic support and resistance. They're side by side. Look at the lows here, look at the highs here. We're clearly sideways. Again, no action to be taken. Okay? Someone might get hypnotized by this chart, okay, because it's blowing up pretty good. But if you zoom out a little bit, you might find yourself trading inside of a sideways market that's just been stretched out a little bit. Okay? So we're sideways. What's good here is that there's some really good examples of a bearish cross, bullish cross, bearish cross, bullish cross, and another bearish cross. Okay, so we're seeing a lot of turns, which is good, which is at step number one. And the other thing that you're seeing too is you're seeing the normal thing happening. After the cross, the market pulls back to the BBC. After the cross, the market finds a way to pull back to the BBC. Okay, after this bullish cross, the market finds a way to pull back to the BBC. Okay, so that is that step number two. Okay, but again, we're sideways, so we're going to stand a parade rest and not push any buttons. Okay, if you're not sure, because it can get a little confusing, because it's easy to talk about, oh, we should be trending, and that's just something easy to think about. In the heat of battle, it's not. Some people struggle with it, which is totally cool. Lean on these a little bit. If they're side by side like this, okay, that's the first indication we're sideways. And you know what? If you're not sure, don't push any buttons. Make sure it's easy and obvious. Okay, just make sure it's easy and obvious. Okay? This isn't. This is sideways. Okay? So dynamic support and resistance will also help you. That's indicator CFRN CF_SR. Support and resistance dots. Okay, that's what that is. All right. So we've established crude's trading sideways for the moment. Okay. I'm going to go to natural gas. Zoom out, zoom out. Again, I think we're trading sideways here, just on a larger scale. Okay. Notice that picture a little bit. What I would like to point out is a few things. Okay. And ignoring, man, I get a lot of emails. Ignoring trending action. Okay. Here's an example where we get a bullish cross here. So we're looking for a bullish opportunity. So the normal thing after the cross, the first thing you want to do, and a good habit to get into, is engage the trend line here. Okay. Here's a good example where the market is trying or making an attempt to get back to the BBC, which we know is normal, and it has so much bullish momentum it can't. Here's a good example of that, and this is why you want to draw a trend line. I blew it up a little bit. Okay. As it's starting to flag or gravitate toward that green line, that's when you start drawing your trend line. Okay. And that's happening. Your eyes are now focused on the slingshot. What's great about it is we have a cycle that's blue that's got a pretty good slope to it. And we got a blue MA1. And that green line is being pulled away, right? Like a slingshot. So you have that space in between. It has a lot of good things going on here. These are all the things that you want to look for, okay, in a trade setup. Okay. So when you're faced with this, when the market closes on the other side of the trend line that you've drawn, and you have the separation, and the market is trending, making higher highs or lower lows, okay, there's some action to take. That means you go inside this down here and you left click in the green and get long, okay? Because what you expect to happen, which we outlined earlier, is ultimately the green line is going to get into the cycle, right? And this is the point where we're going to cut loose. So the market should be making a new pivot high, right? And it does that, okay? So that's the reason why you get in the habit of drawing the trend line, because you never know if it'll get there. And if it doesn't, all right, we got this great separation down below. Go in and take some action. Now, another thing to point out here, yes, it could happen again. And we do. It does happen here. It doesn't quite get to the BBC or the green line, right? We get the close. So our eyes gravitate toward the slingshot, and boy, do we have some separation, right? The green line is pulling away from the cycle. Uh-oh. Something's different than this picture here, right? Right? You said, Bert, that when everything's the same color, probabilities are stacked up in our corner. Well, what happens if it changes color on you? Good question, right? Well, number two, okay, once a cycle turns color on you, this trend line is required. So the good thing about this habit, this good habit we get into, is when we start getting that pullback toward the BBC, okay, if you get in the habit of drawing the trend line, okay, like we're doing, if the cycle, number one, if it takes off on you, hey, you're in a position to take action, okay, go inside the Dom. Or if you get the close above, if the cycle turns color on you, well, the trend line's been drawn in advance, and a close above the trend line is required. So that has to happen. Okay? So if the cycle turns color, we know two things. Number one, a trend line needs to be drawn, and we need to be closing above it. Okay? Above or below it, depending on the situation. Okay? We also know if that cycle turns red against us, that means that's watering down the probabilities of the trade. Okay, so that's the second thing we know. The third thing, okay, is a situation where if that cycle starts curling over like at a 45-degree angle, that is a situation we do not want to be in. Okay, that is a disqualifier. That's going to pop up again, and I'll show you a good example of it. It's starting to happen here. Okay, it's starting to curl over. What it's saying is, hey, we might be having a cycle reset. We might just be running out of gas here. Okay, that's going to pop up again. I'll show you a good example of it, but just happen to be in this situation, so it's a good time to talk about it. All right, so let's, so long story short, there's nothing going on in the natural gas. Okay, I'm going to go back to crude oil. Notice how I zoom out. And again, a good example of avoiding the stop out. Okay, here's the pullback to the BBC with the down close, right? So we were trained to do that. There's a down close, so there's a shorting opportunity. Okay. We have cycle that's red, and we got some separation. Then we had an attempt at the BBC here and a down close, so there's another example of it. Right? There's two examples. The cycle is red. Okay. So the market does give you a few ticks, right? But in the end, what's happening here? Okay, it's going up. And it's not surprising because when you zoom out, this is just saying we're sideways. Okay, and that's the trap that people fall into. All right, now this example, the result would have been a break even, but a lot of those turns out to be break evens or -8s because they got hypnotized or the chart's blown up on them pretty good. Okay, all right. Let's go back to the ES and screw around. Okay. Here's that example I was talking about, where the market is pulling back toward the BBC and you're doing the right thing and drawing the trend line and you get the close above right here. You're like, man, this is pretty good, right? No, that's not good for the home team. Number one, we want it to be blue. We don't want it to be red, right? We certainly don't want it at a 45-degree angle against us. They're going to say, hey, well, it did go up and we would have made some money. Absolutely. Okay. You get a few of those. Okay. This will happen. Trust me. What's going to happen is you're going to say, hey, Bert told me not to do this. It went up. I would have made some money. He's a jerk. Blah, blah, blah. Right? The next time that happens, I'm going to take it. And guess what happens? You will. And exactly what I said will happen. It'll just fall apart, trade sideways, and you just get spun around, and then you get frustrated again. So what I'm telling you is, the cycle is against you. It's the wrong color. and it's at a 45-degree angle against you, don't do it. Okay? A lot of times that'll work against you. It's an observation. You can take it for what it's worth, but you know, Michael will tell you the same thing. Okay? So I'm just warning you. That's one of the traps that people fall into. Okay? So, all right. So let's go over to the gold. All right, this market's got some momentum all of a sudden, right? Notice how I zoomed out just to see, get a larger landscape of the market. Okay. So here's, it made a higher high here. Okay. So get some energy here to the upside. So maybe if this one pulls back, I'm going to go to some other markets. If it just starts pulling back, we'll draw a trend line and we'll see how it looks, and we'll see if we can get inside the DOM and execute a trade. Okay. So let's see what happens. So we'll come back to the gold. Okay. I like the energy. Energy means movement, volatility. Okay. I'm going to go to the currencies. Michael trades the euro a lot. Okay. So the question is, notice the first thing I do is zoom out, zoom out. Okay. A little bit of sideways action. Okay, we were heading down. That was cool. All right. And then all of a sudden, we went into some consolidation mode here, right? So that's not necessarily easy and obvious. What we do have is a nice bearish cross here. That's the MA1 is red crossing the BBC. The market is doing the normal thing, which pull back to the BBC. However, we do have a red cycle, and we got a nice slope to it. That's kind of cool, and that's what we kind of look forward to, right? But we don't have any divergence. We want that green line to be on top of that cycle. Okay, so it's just not quite ready. Okay, British pound. Okay, bearish cross here. Okay, we're sideways. If we start making a new pivot low, then we'll take action there. Okay, I like the fact that this is curling over and it's red. So if the market does pull back, does one of these toward that green line, then our green line should get on the other side of the cycle here, and we should have that separation. So the British pound is actually looks juicy to short if we can get that pullback. So we'll go back to that guy too. Checking on our gold. Okay, if we get another, so now we're getting that bullish separation here. Blue cycle, green line pulling away. If we get another red candle here, maybe we'll draw a trend line. That one looks pretty good. Okay. Notice how we took out the old top. So we are trending here. So gold on the long side if it pulls back. That's what we're interested in. Meantime, let's go fishing a little bit more. There's the Swiss franc.
Yeah, I thought it was bomb threat.
Sideways here. Nice bullish cross there. All right. I think this is the best one. It's got to make a lower low here. And I think the gold is probably the next one. If we get a pullback here, we're going to do something there. I'm going to switch guns on you and go to crude.
I had a little.
So here's what I'm going to do with crude, just because we don't have a lot of time here. Okay? Don't touch your mouse at all. We are not trending. We're sideways here. We've established that. But we are getting a pullback toward that BBC. And we have a little bit of bullish divergence. Okay? So if we get down to the green line here, and we have a bullish close, or a blue candle, I'm going to go inside the DOM and left click. I will get long. Okay? But I want to, again, we are not trending. Okay? So I don't want you to do a thing. I just want to show you how to do this. Okay? So let's see if it comes back here. Let's hope it does so we don't stare at paint here. Come on.
Not a lot of money.
There either.
What else do you know?
I'm switching in between a few markets so I can just show you some guys some good stuff here.
What's left? I don't know for good reason.
Going back to all right, come back a little bit. Okay. While that's happening, let me show you this. This is the tower. This is where we're doing our buying and selling right here. Okay. Okay. And like I said, we're going to left click in the green. Okay. That gets us long the market. We make money. The market goes up. Okay. So we're going to left click in the green. Okay. What's cool about the DOM is, see this little Tinker Toy triangle up here? You left click. Okay, notice how the bottom of the DOM opens up. If you select sell stop and buy stop, just those two buttons there, and you right click over it and go factor in ticks, right click over the word and factor in ticks and set that to 8. What that's automatically going to do is set a stop loss 8 ticks away. Okay, as soon as we get into the market, we're going to have an 8 tick stop. Okay, that's the cool thing about that.
So you get a little bit because you've got some mini S&P accounts. You're getting some discounts applied there, but
let's see here.
Close.
Now here's an example where Michael is calling out the highs and the lows. Okay, so here's a perfect example. He knows the height of each candle is 4 ticks in height, right? So if the low is 48, then the high should be 52. Okay, so what he'll end up doing is right-clicking at 53. Right-clicking at 53 because it has to establish that 5th tick to close out this candle. Okay, so if you want an easy way to know how to, hey, what number do I click on? Just add or subtract 5, and that's the number you click on. Okay, add or subtract 5. So it's waiting for it to go up to 53 before it triggers. And there's our stop loss, 8 ticks behind it if it gets triggered. Okay? So that's Michael's way of being proactive. Okay? Just buying it on the stop in this example. I just hope it trips. Okay? Again, I can't tell you enough. We're trading sideways here, so I don't want you to touch your DOM. Okay? I don't want you to touch the platform. Okay? But the reason I'm doing this, I want to show you how to push buttons on the DOM. Okay? So if you want to buy it like Michael's doing, you want to always left clicking and right clicking in the green or the red. This is where you're doing your buying and selling. There's 2 ways you can do it. If it qualifies, you can just go in and left click. Okay? What's the advantage to that? You're saying, hey, it's my price or nothing. But if the market takes off, well, you might miss the trade. Okay? The other way to do it is right click, right? Like Michael does. Okay? And what you're saying is, look, if you take off on me, I want to go along for the ride. That's what you're saying. All right? But you're willing to accept some slippage if that happens. Okay? And in a fast-moving market, you should expect some slippage. Okay? And of course, it started falling asleep on me as soon as we placed the order. So let's go back to our gold. Here's the gold doing about face. This is a good point. This is why you wait for the up close. Normally, guys will say, why don't you just place an order right there and buy it? Okay?
Well, yeah.
The reason is for this reason. Sometimes it'll just blast right through it. Okay? You avoid a stop out. So what you're doing is you're substituting price for action. Okay? So that pretty little picture I showed you earlier, okay, with this candle here, the question I didn't get it today, is, hey, why don't you just put an order right there, and then you save a few ticks. The reason is, man, it just hit us right in the face. Because sometimes it'll just do this. Okay, it'll just plow right through it. Okay, you're sacrificing price for action. It's that little extra confirmation. Okay, you're hanging on to it. All right, now where were we? Crude oil, right? So we're waiting for the crazy crude to do something here. Of course, it fell asleep on us. I'm gonna go look over to that pound. I thought the pound looked juicy. It does. We just need a pullback. The Swissy doesn't look too bad. Or not the Swissy, the Euro. Okay, that's how I would draw the trend line. We're not trending. Okay, we didn't make any lower lows, right? Okay, but if you're drawing a trend line in the Euros, it should look like mine. Okay. All right, so let's natural gas, no, crude oil. So let's see. Hopefully this will do something. ES, all right. I'm going to go back to the ES. I'm going to ask him to look at the ES here. Zoom out, zoom out, zoom out. Sideways at best, so we're not going to do anything. Okay? Sideways at best. Okay. I'm trying to find something we can sink our teeth in here. No. I'm going to show you an example. Go to the Japanese yen.
He's fine in the morning. Keeps trying to buy. He's put some in there. So we had in the morning.
Well, I'm trying to find a market, guys. I cannot find one. Okay, there's the pullback to the BBC. Again, this market isn't trending, but here's a way to be proactive. If the high is 92, okay, 1, 2, 3, 4, 5, you would right-click in the red. Right-click in the red. 5 ticks away. 5 ticks away. If the high is 92, then the low should be 90. Then you put the order in 1 tick below. So if the euro falls apart from here, we will be short the euro. Okay? If it takes off from here, we are not short. Okay? If it makes a new high, then we have to adjust it, right? But for the moment, the high is 92, and if we subtract 5, that's our order. Okay? This market is not trending. You should not be pushing any buttons in there, but again, I'm just going to show you an example. All right, so our crude oil. So I'm going to cancel that order. If the low is 45, the high should be 49. Right click, add 50. If the low is 45, add 5 to it. That's the price you put on. Click. Okay. Again, the fact that we're seeing this kind of action is not surprising, given the fact we're doing sideways action. Okay, but let's see.
Yeah, without being there and seeing it, so I mean, I know the gold goes up, the margins go.
Oh boy. We're waiting for the crude to pop a little bit. Or we're waiting for the euro to fall apart a little bit. High is 92.5, right?
Exactly. And then
subtract 4 from that. 1, 2, 3, 4. The new order should be 109.90. That's our new order. Okay, if the high is 92.5, subtract 4, 90.5, add one more, 90. Okay, if it makes a new high, we change it. Go back to crude. The low is 45, add 5, 56.50. Come on. We do have separation, and we have a nice slope to it, right? Through cycle with a nice slope, and the green line's pulling away. So we can get excited about it, but again, we're not trending. So let's wait for Clark to call back here, but I want to hang out with you guys and see if we can at least get something on the board here so we can get something accomplished here.
One product.
All right, so we're waiting. So look at our euro.
So he starts out.
We are waiting.
After 7 a.m. So it should be at 5
Can't lay here all forever here, so something's going to have to give.
Knows to cancel, he knows there's issue about it.
Sorry guys, it's just it's funny. It's just, we have literally fallen asleep here. I will try another market. Okay, here's a pullback in the ES. Let's try this one. We know that once.
But he doesn't have enough to be free. It costs him $1,500 to be free. Yeah, he had 3 on earlier for last month.
Okay, there's the down close from the trend line. Not only did we touch the PVC, we had a down close, and the cycle turned the color on us, right? So that waters down the probability. We have some separation. Okay, I left clicked in the red. That's what I did. Okay. Are we trending? I would say no. This isn't an easy and obvious one, but it gave me an opportunity to actually push a button in the DOM. Okay. Now, rules of engagement, money management part. If the market, and by the way, we are short right here. It's well advertised in 4 different spots. Okay,
so that other one,
right here, here, your P&L will be moving, and this big red line right on the chart. Okay, there's enough spots that says, you know what, you're short, dude. Okay, this here is our stop loss. I told you with the bracket order down here, that would automatically be placed as soon as we got into the market. So that's one less button we have to push, which is good for the home team. All right, if the market moves 4 ticks in our favor, okay, it's down here like it's doing now, we are going to left click on our stop, oops, and drag it down to our entry. Okay, drag it down to our entry, and I got it to plus 1 tick. All right, that's the rules of engagement. Plus 4 ticks in our favor. Also, if it closes on the other side of the MA1, which it does here, you move it down. Okay, so I'm going to move it down a few more ticks. Okay, so no matter what, we lock in $37.50. Okay.
Yeah, some people want to trade stuff. You start to lose money.
We expect the green line to get into the cycle where it's just about at right now. Okay.
Maybe these were.
So when that happens, you want to tighten the screws up on that sucker. Okay. And then we're out. Okay. And I did that because we were at the point where the green line is getting into the cycle. So in the training room, you'll see Michael do this. Yellow here. And yellow here. When it's like this, you know he took a successful trade. If they're crossed up for whatever reason like this, then you know he was stopped out on it. Okay? So that was a good example. Again, honestly, guys, I think this is sideways and I wouldn't have taken it, but just to give you a little taste of how to do something in the DOM and manage a trade, I did this because it did have some of the rules built into it. And the rules were bearish cross, pull back to the BBC. In the process, we drew a trend line. We had a close below the trend line. The cycle was flat. It actually turned color on us. So the trend line was required, and it closed below the trend line was required. All right. And so all I did was go in here and left click. Okay, got short in the market. Great thing is the market did go down. I was able to move the stop down along with it. Okay. And as I said earlier, the trade exists down in that slingshot. We expect the green line to get into the cycle, and then guess what? Pull away. And guess what it'll do? Market will pull away. Okay. Looks like a euro just got short. So let's go over there. Let's go hang out in the euro. All right, so hold on. There's the down close with a ton of slippage. So actually the execution should have been right there. Right, Dwayne? Oh my God, Mike Reed just passed away. Oh my gosh. Here's the trend line. That is the close. Okay, below the trend line. Okay, this is step number 2. Man, that's sad. Yeah, kind of taken away by that.
Oh, it's right account. Oh, he just tried to sell too many. 15, 20, 30. He's got money, but not that.
Okay, so this is where the short would have been right here at 91.5. Okay.
This shit I did.
The stop loss is here. All right, had time with that one. All right. So, sorry, I get distracted there. Short, the euro. Okay. As I said earlier, we're not trending here. Okay. But all the rules are there. Okay. We had the bearish cross there. We had the pullback to the BBC. We had the down close, right? We have a red cycle with a good slope, and we had a pullback. We have some space here. So it's all there with the exception of the trend. Okay. All right. Now it looks like a crude oil just fired. So let's go over there. All right. Again, here's the crude oil. It tripped at 56.50. Okay. Again, we're not trending here. So this action here is a good example of the grief that you would fall into when you're stuck in a sideways market. Okay. You're spinning your wheels with a potential stop out here because the market isn't trending. Something that might have easy and obvious right here, okay, is not looking so great. All right. So here's a hot key here. You get into a situation where you just got to get out of the market right here, right now. Exit at market and cancel. That hotkey is a great button. Exit at market and cancel. The euro. Okay. Same thing. If you're in a trade like I gotta go, an emergency, exit at market and cancel. All right. All right. So I wanted to at least, number one, show the new guys the setup. Okay. The rules of the road are right here. Okay, set expectations, what you're getting into. And the idea was to get into a live market and show you the setup. Today was boring. This afternoon there was not much going on, but there was some content there to say, here's some traps that you could fall into. Some of those traps are, market's not trending, we're sideways, and you don't see it because the markets are blowing up, under a microscope. Zoom out. That's your solution. Okay? You'll avoid some of those bad trades. Okay? Get in the habit of drawing trend lines. Okay? The reason you do that is twofold. If we can't get to the BBC and we have that bearish divergence down below, get inside the DOM and take action. The other reason why we do it is if this cycle here turns color on us, that trend line is required. And you have it drawn already, so you're not going to fumble around trying to draw a trend line after the fact. If you get in the habit of drawing those trend lines, if you have the separation or it turns different, you're in a position to push some buttons. All right, so that wraps it up for this week. Kind of boring. I recorded it. It'll be in YouTube, but I'll do this every Thursday for an hour. And I'll do it as long as people show up, okay? And we'll hang out. We'll answer questions, and we'll try to get everyone up to speed, okay?
Yeah, but there's a whole
Guys that are brand new, I'll see you in the morning. Check out the videos. It's on YouTube, CFRN Thursday, okay? If you go CFRN Thursday, okay? If you go there, okay, they're all recorded. In fact, I don't know what that is. CFRN Thursday. Yeah, if you go here, and I think if you hit notifications or something, you'll get a notification when I get it downloaded. All right? So if you get a chance, go check them out. Okay, it's a good way to learn what's going on. Okay, it's kind of boring because I go over the same stuff over and over and over and over again. But I'm telling you, at the end of it, okay, you'll be more disciplined and you'll be able to. It's like a broken record. You're just creating discipline. Okay, you're just training your eyes, training your hand, and your thoughts to look at certain things. Okay, and that's the name of the game. All right, I'll be quiet. All right, see you in the morning.